Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be going through a dumb mistake that everybody makes, or the majority anyway, at two different points of the market. One is at the top of the market and one is at the bottom of the market. And while everyone is aware of this mistake, we continually make that mistake. And it's always good to be able to be aware of it by talking about it and bringing it to our attention so that we can avoid making that mistake. Secondly, I want to go through the 60-day cycle in terms of exactly where we are, where we're heading, and what are the probabilities of what's going to happen in the next few weeks and months. Okay, so if that sounds interesting, then you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. No one knows what's going to happen in the next minute, the next day, the next week, the next month, next year. No one knows. All we know is that we've got charts which give a very good level of probability in terms of the direction of travel for the Bitcoin price. So please do your wider research before you make any investment decisions. Okay, so with that out of the way, I'm going to start off with Wayne Dyer's quote because it's very relevant to Bitcoin. And that quote says, if you change the way you look at things, then the things that you look at also change. And what I mean by that is that there are two emotions that we have at the top of the market over here, and a very opposite emotion down here. So what you may have noticed if you've been in the market long enough is that as we're rising here, the more we see the price rising, the more greed that we get and the more money we want to chuck at these prices here. So what we're really doing is we're averaging up the cost of our Bitcoin over here to the point where we may have actually got in at these prices down here are about 12,000, 13,000. But by the time we get to the top over here and we've sold our car, we've made a loan, we've maxed on our credit cards, used up all our savings, by the time we get to the top here, the average price we've paid is around about 30, 40 or even 50,000. That's some people I know. So what happens when the market does this and this? So your average price here is, let's say, 45,000, and you're seeing the price go up and up, so your expectations over here is this, but the market fools everybody and does this. So by the time you realize that the market's not going to go up, that we're now in a bear market, we get to this situation down here. So instead of the average price over here of 12,000, we're now carrying an average price down at 50,000, 40,000. And by the time we get down to these levels here, we're so frightened that at every time we get a big massive sell-off, there's a proportion of people who get out of the market and sell everything. And then we get another one, and then the rest of the people, another big portion, get out of the market. To the point where we get to over here when there aren't any sellers left. They've all trickled away as the price has been going down. The psychology is this, that as the price is coming down, people are thinking, well, if I'd have sold here, I could have bought down here. Or if I could have sold here, I could have bought down further down here. And because this has been a long and brutal bear market, people are now selling over here, thinking with the psychology that, well, it's coming down and coming down further. So therefore, the pattern of behavior and the pattern of thinking and the emotion is that, oh, we'll catch it over here, or we'll catch it over here. So instead of buying around these levels, they're either selling or waiting for lower prices, which is the exact opposite of what happened over here. Here, people are thinking they're missing out, so they're putting money in at the wrong times and waiting here for lower prices, again at the wrong time. Now, of course, nobody knows what's going to happen, but it would make sense that as we're going up, we should take profits along the way rather than putting money in. And here, it would make sense to put money in and dollar cost average into the market rather than take money out of the system over here. So this is what the title of this video is trying to avoid, and this is what Wayne Dyer is telling us when we change the way we look at things, then the whole things will change. We'll get different outcomes when we're going up and different outcomes when we're going down. So all I would say to people is, I'm not saying you should buy here or sell here or do whatever, because we really don't know if this is going to go to 12,000, or some people say all the way down to 3,000. We could quite easily go like this. Of course, everything's possible with Bitcoin. So just like at different points on the way up, people start putting money into the market and then lose it all the way down here. It just seems to make sense to have a little bit of a holding, maybe here, and then if it falls further down, have a little bit of a holding there. And if it falls down further down, then enter a little bit more here. So what you do is you dollar cost average. So this way, if the market does turn here, you've got an entry at this point. So you're not out of the game. And if it goes further down, then you've got even more of an entry here. And the average is going to be in between that point. So when the market does go up here, then you're going to be making quite a bit more money by doing that. So what we need to do is to change the way we look at things, and then the thing itself will change. So have you found value in that? And if you did, then please do remember to like and subscribe if you haven't already done so. Okay, so on to the 60-day cycle, and it seems to be playing exactly as we have been following it over here. So we started the 60-day cycle over here when we went down to 15,500. Since then, the 60-day cycle tells us that we're going to have some sort of a relief rally, which we got over here. This is the midpoint. The white line, the white dotted line is the midpoint. And we know that around the midpoint, anywhere around here, we're going to get a top at the midpoint of the 60-day cycle, which was before the midway, and hence we call it the left translated cycle, i.e. that we've ended up at top before the 30-day cycle. So we've now got a lot more days for it to go further down. But as it turned out, we went further up and had another rally to this level here at 18.3, which gives it a right translated cycle, which is better because it gives us less days for it to come down. And of course, Bitcoin can dump very, very quickly down. But since we called the top at 18,300, and I've been mentioning in all my videos all along this 60-day cycle of exactly where we are, and when we got this doji candle, this gravestone doji with a long wick at the top, that was telling us with a high degree of probability that we're going to be coming down. And since this 60-day cycle was going to end around about this time, remember 60-day cycles are a rough period, so you can add 5 or 10 days either side of these cycles. So they could finish at 50 days or 70 days. But roughly they're 60 days. So what we've now got is we're coming to the end of this cycle around about the 8th of January. We've topped out at the midpoint here, and we're on a trajectory to the downside over here. Where this will go, no one knows. But what we do know is that the first part of the cycle, where we're having a relief rally to the top, is obviously the stronger part. The mid part is usually the consolidation part of it. And then the last bit is the weak part of it. This is where we're at the moment. Currently, we're on day 48. So we're getting to the point which comes in the realm of the end of the cycle, i.e. between 50 and 70 days. But one thing we have noticed here is that we have created higher lows along the way. Maybe that's a clue that this cycle is going to end with a higher low further up here, that we're just going to go sideways for another couple of weeks. Now that would be incredibly bullish because we normally come to the end of the bear market around about the 12th month. So if you look through all the previous cycles, they've come to the end either in November, December or January. And I've been saying in the last many videos now that these next 30 days are absolutely crucial and will give us the sign whether we have come to the bottom of the market with a higher degree of probability. So if we do make it to around these levels here, without the market making a lower low from the 15,400 over here, we can say with a good degree of probability that we may have bottomed out at 15,400. But because this is the weak part of the cycle, we really have to keep our focus on here, because any bad news from Genesis or Grayscale or Binance, and we could have another dump to the downside very, very quickly, a bit like this here. So that's where we're at, and every day that passes and we don't make a lower low increases the chances that we have bottomed out here and that we have a great opportunity to start moving to the upside. And if that is the case, that we do start moving to the upside, where can we go? These are the real levels we've got to be looking at. Having been rejected at 18.3 because of all this support over here and further to the left of that, so 18.2, 18.3 over here, we can say with a high degree of probability that if we do make it to this top here, we're more than likely going to get rejected here with a little bit of a pullback. Now, of course, in the next 60-day cycle, we may start off like this. We could still end up with a dump to the downside. But since the FTX scandal over here, and then we had the BlockFi problem, then we've had the Binance problem, if any of those haven't been able to push the market down, then it is going to take something quite monumental for the market to now come down over here. That's what I mean, that every day that goes by without the market dumping, just like over here, gives us a great opportunity to think that the market has actually bottomed out here. But as I said earlier on in the video, that the psychology is that we've got used to these dumps here and we have a fear factor that this could go down, and of course it can. But we mustn't overlook the great opportunity that could really be presenting itself here just because we're very fearful that it could do this down here. And if we do manage to get above the 18,000 over here, then you can see quite clearly the next level is at 21.5 over here. And if we look further back, these are the levels we must be clear about. So these are the points we got rejected earlier on in this cycle at 22.8, and this is the ultimate one over here at 25,200. And the reason why I say this 25,000 is going to be a neckline is when we look on the weekly chart, not many people are aware of this, but there is the beginning of an inverse head and shoulders developing on the weekly chart. If we put the neckline here at 25,000, it looks to me that we're going to be having a potential of a inverse head and shoulders with the shoulder coming up to the 25,200 here. We've gone below that to 15,400 here, creating the head, and the formation would tell me that with the next 60-day cycle coming up, we're running into the end of this cycle here. If we can go sideways, then the first 30 days of the next cycle should see us having a brief relief rally to the upside here. And as I said before, more than likely, with a high degree of probability, we're going to get rejected here. So that would be the end of the head, and then you may well get another of these shoulders developing over here before we finally break to the upside over here. Then you've got your inverse head and shoulders, and that should really confirm the end of the bear market down here. So if you're looking for a safer entry, then this entry here at 25,000 is probably your best bet. And depending on your risk, some people will try and get in after we clear this level here at 22,800. Some will get in at this level here at 21.5, and some will be more aggressive and get in once we clear 18,000. So depending on everybody's individual unique circumstances and their own unique way of thinking, people will do these things at these levels. But these are the levels we need to be aware of. But the two levels certainly that we need to look out for now is this level here at 18,200 and this level here at 15,400. So while we're oscillating in between this range, a break of these two levels, here to the upside and here to the downside, will define where this market is going in the next few weeks and months. My own honest view is that with a high degree of probability, the way this 60-day cycle seems to be going, and in the event that we don't get a big capitulation of a major exchange like Binance or Grayscale or Genesis, then if that doesn't happen, more likely, with a high degree of probability, we're going to be moving to the upside here. And if you've been following me on the Twitter in the last few days, you'll know that I've been giving you a lot of the candlestick developments, and really they've been playing out just like some of these candles are predicting. They're extremely powerful, and they give you the direction of travel for the price after those candlestick patterns have developed. And I gave this particular pattern here that this was an indecision spinning top, and this was going to determine the price action along the way here. And 3 days later, we're still within the realms of that range here. And currently we're in the same position. We've just been going sideways here. So in conclusion, please remember the psychology over here will be making everybody very fearful and waiting for the right opportunity to get in at lower levels. The danger with that is obviously people are going to miss out. So for me anyway, and everybody's got to do what seems right for them, but for me, I've been dollar cost averaging since we hit the 17,500 level, and I have a little bit more left if the market does go to the downside. But certainly my core position is very much in now here for what it's worth. Okay, so I think we'll leave it there. I hope you found value in the video, and if you did, then please do remember to like and to subscribe and to turn on the notification bell if you haven't already done so. In the next video, I'm going to be showing you a chart which has only given signals 5 or maybe 6 times, and it's never ever been wrong. And I'm going to show you exactly what that chart is saying. So look out for that. If you want to leave any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.